Welcome to The Explainer. Today, we're digging into the latest earnings from two tech titans, Tesla and Alphabet. And wow, they could not be on more different paths.
So, on one hand, you've got a company hitting its steepest sales drop in over a decade. And on the other, surging growth, all powered by AI. Let's get into the numbers, because we need to understand the high-stakes strategies at play here.
All right, so first up is Tesla. And, they face some serious headwinds this quarter, reporting the sharpest drop in revenue they've seen in more than 10 years. The numbers are, well, they're pretty stark.
So, what about total revenue? Well, it dropped down to $22.5 billion. Now, that's a 12% fall compared to last year. And get this, it's Tesla's single worst decline in over a decade.
So what was behind that revenue drop? Well, the main driver was a big hit to vehicle deliveries. They were down 13.5% from last year. Price cuts and just fierce competition are finally starting to take their toll. And yeah, that pain, it hit the bottom line, and it hit it hard. Net income fell 16%, and their operating margins, they got squeezed down to just 4%. It all just added up to an earnings mess that really disappointed Wall Street. But here's the thing. Those numbers, they don't tell the whole story. While they're facing all this short-term pain, Tesla is making a massive pivot. They're betting their entire future on 3 core, high-risk gambles.
Okay, so what are these gambles? First, they're launching a more affordable EV. It's basically a stripped-down Model Y to try and attract new buyers. Second, they are going all in on autonomous robotaxis. They've even got a small pilot already underway. And third, and this is a big one, they have a surprisingly powerful secret weapon, their energy division, which just posted a record-breaking gross profit.
And look, as Elon Musk himself put it on the earnings call, autonomy is the story. The company's focus has fundamentally shifted. It's not just about selling cars anymore, no. It's about cracking full autonomy. That is the trillion-dollar bet. Okay, so now let's switch gears and talk about Alphabet, which, man, had a completely different quarter. While Tesla was hitting the brakes, Google's parent company was hitting the accelerator hard. Get this. Total revenue soared 14% to an incredible $96.4 billion. But look closer at what's really driving that growth engine. The cloud division grew an explosive 32%, and that's all fueled by this massive demand for AI services. So what this really shows is that Alphabet's AI everywhere strategy, it isn't just some future promise, it is paying off right now. They're putting AI into literally every product, and it is absolutely working. And the adoption rate, it's been incredibly fast. In just 2 months, over 100 million people have tried out the new AI features in search. The Gemini AI model, it already has 450 million monthly users. And on the business side, their cloud customer count jumped 28% in just 1 quarter. That's wild. So with all this success, what do? You double down. And that's exactly what Alphabet is doing. This is an enormous power move. They aren't just enjoying their lead, they're trying to make it completely untouchable.
Check this out. They are boosting their planned capital spending for next year to a staggering $85 billion. That is a mind-boggling amount of money, and it's being poured directly into building the data centers and the AI hardware they need to totally win this AI arms race.
All right, so let's put these two titans side by side and just see how this all stacks up. Because really, their current realities could not be more different. Okay, so when you look at them side by side, the contrast is just, wow, it's stark. Tesla's revenue is a fraction of Alphabet's, and it's actually shrinking right now. Meanwhile, Alphabet's massive revenue base is still growing like crazy. You've got one company navigating a serious downturn, while the other is using its immense profitability to just invest. So what this all boils down to are 2 fundamentally different philosophies for growth. And this is really the key takeaway here. Tesla, they're going for a high-risk revolution, betting everything on future tech like robotaxis that, let's be honest, is still unproven. Alphabet, on the other hand, is executing a high-investment evolution, just pouring cash into what's already working to totally dominate the present. And so this leaves us with a really fascinating question about what it actually takes to win in tech today, right? Is it better to endure all this short-term pain for a shot at a revolutionary long-term gain? Or is it smarter to build an absolutely insurmountable lead by just doubling down on what's successful right here, right now? I guess we're all going to find out in the quarters to come.